It is time for business now, and we're going to get the very latest on the fallout, if you like, on the collapse of Silicon Valley Bank, especially this on the banking sector. Charles Pellegrin is on set with us to tell us a lot more about it. Charles.
That's right, Stuart. Shares in banks around the world slumped on Monday, despite Joe Biden saying that the system is safe in his TV address yesterday. Now, despite U.S. regulators also stepping in to protect all depositors at Silicon Valley Bank and Signature Bank, both of whom collapsed. Now, in Europe, we saw major lenders like Spain's Santander or Germany's Commerzbank lose 10% at one point during the session, and major U.S. lenders like Citigroup or J.P. Morgan Chase also saw their share prices drop. Hard to shake fears of contagion to the wider banking sector, but most affected seem to be smaller regional banks in the U.S., banks like First Republic, Western Alliance, or KeyBank that lost respectively 61%, 47%, and 27% in their share prices over the course of Monday trading. These lenders had tried to reassure customers that they had enough liquidity to protect themselves, clearly that not having enough of an impact on their share prices. Another consequence of this is that larger U.S. banks are now being flooded with requests from people trying to open accounts or transfer funds to them in a bid for safety. Reports describing this as the biggest movement in deposits in decades. As soon as Silicon Valley branches reopened on Monday under the tutelage of the Federal Deposit Insurance Corporation, well, quite a few of the bank's depositors' first move was to move their money elsewhere. Take a listen.
We were fine. It was just an issue of, okay, what are we going to do? Do we leave it there? Do we take it out? And like I said, we decided to take it out. And so I was here this morning to take care of that.
We were panicking. I think a lot of us were panicking. And we're trying to get through in terms of how we open up different bank accounts quickly, and more so in terms of how we can, whether we'll get our cash back or, whatever money we are left with on the bank side.
And pressure on banking stocks continuing this Tuesday in Japan. Three of the country's largest lenders, MUFG, Mizuho, and SMFG, all seeing their share prices fall sharply, down 8.5% for Mitsubishi here, down below 7% for Mizuho and SFMG. Investors looking at the possible impact of the SVB collapse on decision-making at the Federal Reserve in the U.S. and betting that the U.S. Central Bank will choose to ease on its policy of rising interest rates to combat inflation. Higher interest rates tend to benefit large lenders like the three that you see on the board. Now, on the whole, trade indices in the region are trading or traded lower this Tuesday. The Nikkei in Tokyo finishing the session below 2% at 2.19%. The Shanghai Composite down 0.75%. The Hang Seng in Hong Kong down 2.3%. All eyes will be tuned and turned to the U.S. later in the day when inflation data will be released, something the Federal Reserve will obviously be taking a look at before making a decision on rates later in the month. And as this goes on, questions over regulatory failure are swirling, especially as the legislation put in place following the 2008 global financial crisis was partially stripped down in 2018. U.S. President Joe Biden is now promising stiffer banking regulation. Karis Garland tells us more.
The collapse of Silicon Valley Bank and Signature Bank represents the biggest test to the U.S. financial system since the 2008 crisis. And even as President Joe Biden tried to restore confidence in the American banking sector, he admitted there was need for tighter regulation.
I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses.
To prevent a repeat of the global financial crisis, Washington enacted the Dodd-Frank Act in 2010. The law imposed rules on how banks can invest and minimum requirements for liquid assets. It also established regulatory bodies to watch over the financial services industry. However, in 2018, under then-President Donald Trump, some Dodd-Frank regulations were weakened. Banks like SVB were in favour of this rollback, arguing that they weren't big enough to warrant oversight. The move allowed them to invest more of their deposits and make more money for executives and shareholders. Critics of deregulation are now having an I told you so moment, like Democratic Senator Elizabeth Warren, who said bank failures are the direct result of leaders in Washington weakening the financial rules. US Treasury Secretary Janet Yellen has previously said she's in favor of beefing up the powers of regulatory bodies. However, Biden is facing a divided Congress, which could make passing tougher regulation laws difficult.
And let's end with this latest news from German automaker Volkswagen, the group unveiling a 5-year investment plan worth 180 billion euros, 2/3 of which allocated towards electrification and digitalization, with 15 billion euros ring-fenced for battery plants and raw materials. Its first such plant outside Europe will be in Canada, with production to start from 2027. The group also saying that investments in combustion engine technology will peak in 2025 and decline after that. The objective, Stuart, being to reach 50% of all electric sales around the world by 2030.
Yeah, good to see all that investment for electric car sales. Thanks so much, Charles Pellegrin, with the business news for us here on France 24.